One trade can change everything.
Hello everybody, welcome to today's tutorial. We're going to be talking about harmonics, which are among my favorite of patterns. We've been trading a lot of harmonics lately, and that's kind of why I want to do this tutorial on them, to give you guys a little bit of edge and understand why I'm using these more frequently now, being that we are range bound. We are consolidating, prices moving sideways. These are periods of time that you're more likely to see harmonics show up, right? Harmonics show up and work best in times of ranging or some degree of sideways price action. They are reversal patterns. So if we have a bullish harmonic, then it's going to signal price for a move up. A bearish harmonic will signal price for a move down. And before we get started, if you haven't already, you're going to have to watch. I have a tutorial on Fibonacci retracement, Fibonacci extension, and the Fib time tool. If you don't already know how to use these or have not seen those videos, I highly recommend that you start there. You won't be able to draw or understand harmonics if you don't already have some degree of understanding of these tools. Okay. All right. So with that said, we're going to go ahead and I'm going to pull up a little bit of a cheat sheet here. These are some of the more common harmonic patterns. These are not all of the harmonic patterns, just the more common ones that I suggest you start with. You have your crab harmonic and your butterfly harmonic, which are external harmonics. Okay. And they're external harmonics because price, in this case, let's backtrack. I'll just kind of show you this a little bit here. So price, you would draw starting at X, then price moves up to A, down to B, up to C, then down to D. This is an external harmonic because D goes below or extends beyond X, right? This is the bullish formation. The bearish formation, X is where price begins, moves down to A, up to B, down to C, up to D. As we can see, it's external because D goes beyond X. Same with the butterfly harmonic. Price D extends beyond X, D extends beyond X. Now, on the other hand, we have the bat, Gartley, and the cipher harmonic. With these three, they're actually internal harmonics because price, for example, in this case here, D does not extend beyond X, neither here or here or here. Now, one thing to make note of on the cipher, and this is the only harmonic of these examples that we have here, where C extends beyond A. Okay? If you go ahead and look at these other ones, C remains inside of A, remains inside of A, remains inside of A, so on and so forth. Cipher is the only one that would be the case. Okay? And that's something that we can take a look at, at a different time. These numbers here, the 382, the 618, 382, 618, 886, 1618, these numbers, as I'm sure you'll recognize, are Fibonacci numbers. And this is exactly why it's very, very important that you guys have an understanding of Fibonacci retracement, Fibonacci extension, as well as the Fib time tool. Okay? So go ahead, you can look this up online, save this chart, get yourself a cheat sheet, and use it as reference as you're looking to start trading harmonics. With that said, we'll go ahead and take a look at a real-world example. Now, it's really important to note that price is never going to do exactly what you think it's going to do. It's not going to hit exactly those levels. So you can give it a little bit of leeway, and that's something that we'll talk some about. So in this case, we kind of have this price action here. We had a significant move down, and maybe we're expecting to put some kind of a range into here. So we can go ahead and draw out a harmonic pattern, right? We can just go ahead and say, well, this is our swing high for this area. This is our swing low for this area. This could be a potential B, right? Because we went up to roughly about the 618. Now, if we had a retracement to the here we go. If we had a retracement to the 618, right, then we would be looking to be drawing out a Gartley harmonic, and this would be a bearish Gartley harmonic, right? So we have our X to A to B, the 618, right? As you can see, the bat is between the 382 and the 0.5. In this case, this would be the 618, right? So we'll go ahead back to our chart here. And this would retrace down to roughly the 886, so pretty close. And then up to the 786. Now, I do want to like show you guys this just so you understand. So if I pull a fib retracement from X to A, right, that's the 618, okay? If I pull a retracement from A to B, and we go ahead and pop on our 886, the 886, and if we go ahead and pull our fib retracement from X to A, and we go ahead and put on our 786, there you can see our 786, right? Now this is where the fib time tool comes in, and I like to think of it like this. Why is it called harmonics? Because price is moving harmoniously, right? There is some harmoniousness in the way that price moves. That's why we have fractals and why things sort of reflect one another. So you would take your fib time tool and you would go from X to B, go ahead, double click, and you would look to your one-to-one extension. So we'll go ahead and just pull that up. And the one-to-one extension, roughly speaking, is right where you would want to see the D wave complete. So this is what's so great about this now. We have this potential harmonic in here, right? What I like to do with these potential harmonics is to trade C, and then of course D, which is the completion of the harmonic. We would expect price to move down. And what's so great about this, like I said, is not only does it give you a target in terms of price, but it also gives you a target in terms of time. So you could say, you know, somewhere around the week of March 27th, I would be looking for price to be trading around $48,000, in which case I would be looking for a short position. Okay. So being that this is a Gartley harmonic, we could expect, you know, some degree of a retracement down to the 618, right? If we go ahead and look back at our cheat sheet, that retracement down could be anywhere between the 382 and the 886. So this is why it's really important to have a lot of confluence for some of these waves, especially C and D if you're going to trade them, before going ahead and, you know, just loosely trading Fibonacci levels. So in this case, I remember trading this. This is an old price action thing. I just want to show you guys because it's a great example. If we go ahead and watch price, you know, trade down, we say we have quite a bit of confluence at the 886. That's kind of where I'm expecting price to go down. We can kind of retest this low down here in this area here. Okay, cool. So we went ahead and we tapped the 886 here. So I would go ahead and move our C wave here and say, all right, this is our C wave. I believe that that's totally in. And we can go down to a 4-hour time frame. We could see, you know, of course, price already got that move up. But let's just say, you know, down here, price gave us, you know, roughly 8 to 12 hours of trading down here in this zone. And you can say, well, I have this Gartley harmonic drawn out on a higher time frame. I believe that this is going to be the C wave. We just hopped at the 886. In order to invalidate this harmonic, price would have to trade below A. Okay, that would be my invalidation point, aka a great place for a stop loss. So let's say we go ahead and enter here. We put our stop below A, and we go ahead and target the 786, right? Because this is a Gartley harmonic, and that's where we would expect price to trade up to. All right, so go ahead back to our daily time frame, and we can hit play here. And of course, if you're going to trade the C wave, it's important to take profit along the way because maybe your harmonic doesn't actually play out. So you can use other forms of technical analysis in order to determine where you may have wanted to take profits somewhere along the way, rather than just holding all the way up to what would be a potential D wave, right, for this Gartley harmonic. However, in this case, as you guys will see here, price does actually wind up trading up to that 786 virtually to the day. So we can go ahead and see this long trade on the C wave was perfect, right? Or the D wave, trading C to D, worked out perfectly. This was, you know, roughly a 4.6 risk reward ratio trade. We had a very clear invalidation. You know, it's just a beautiful long trade. Okay, so we'll go ahead and delete that. And I want to point out here, look just how, I mean, seriously, like nearly to the day, we go ahead and we put in a high here for that D wave harmonic on this Gartley harmonic, right? Nearly to the day as we were expected to. Now I want to emphasize this is not going to happen all the time. Sometimes it'll happen, you know, maybe a few days off or you know, depending on the time frame, you can give it a little bit of leeway as to when it's going to play out. Now, if we had that, you know, let's say if we had that high put in over here, you know, then I would say that's probably a little bit too early, right? You wouldn't want your harmonic looking something like this where price is putting in that high here. I would say, gosh, that looks a little bit early. I wouldn't be surprised if we had another move to the upside. If it did reject here, you know, say it did come up and do something like this, I would say, oh, I don't think that's the D wave of the harmonic. I wouldn't be surprised if we got one more move up to give us the actual D wave there in terms of time. Okay, so now at this point, great, we took that long trade up to the D here. Now at this point, we're going to want to go ahead and trade it down to our targets for this bearish harmonic. So a couple different targets that you can do here. You can do the 618, and of course, again, you're going to want to use other forms of confluence, but you can do your 618 here, right? Another a great spot for a take profit. You can also go ahead and use your fib extension tool. Draw from X to A and then up to D. And two other great spots to take profit then would be the 618 fib extension, but especially the 1-to-1 extension on the harmonic. This would basically be my primary target for any harmonic I draw. I would definitely want to take profit somewhere, you know, between either the 618 retracement from C to D, or otherwise the 618 extension of this harmonic, but especially the 1-to-1 extension of the harmonic would be my primary target. So we can go ahead and hit play and see how this played out here. This is just such a great sign, right? You see it reject there. I mean, it's just so clear for a short that this harmonic is just playing out so well. So the 618 here wound up being a really, really great spot to take profit. As you can see, it found support and spent, looks like about a week, maybe a little bit longer of time period here. Maybe almost 2 weeks it spent in this zone here. Now we can see that we lost and back tested the 618. There it was, the back test here, and now continuation down. Potential take profit here. Some degree of a bounce, but not so much. And then here especially, just look at that, boom, perfect. On the 1-to-1 extension, held it as support even. What a perfect take profit, right? And now we can see price spent, you know, a few weeks in this price zone, holding the 1-to-1 extension as support. So you can see just how powerful this tool is. Not only did it give you targets in terms of price, but it also gave you targets in terms of time to give you an idea, and better yet, even a more of a realistic expectation of how quickly price can move up and down to certain price targets, right? A lot of people might say, oh, from here, yeah, we're simply going to go ahead and move up. But if you had your 1-to-1, you know, fib time drawn showing that this was your target for this harmonic, on this move up, you might say, this is a little bit early. I think that this could be retraced, right? I don't really trust this move, or, you know, it just gives you some degree of an aspect of timing, which not a lot of patterns can give you. So this is just a really, really nice, that's a lot of the reason why I really love this pattern. So I will say of all the harmonics I've ever traded or seen, this is probably the most perfect one that I've personally traded. And I will tell you, do not expect that every single one will turn out this way. Okay. And I'll give you another, we'll go through just maybe one or two other examples here. We're going to go ahead and turn off our replay here. And we're actually go to current price action down to a 30-minute time frame. There's a harmonic here that we had just traded. In this case, this was a bullish harmonic instead of a bearish harmonic. Go ahead to our harmonic tool, turn on our magnet tool here, and draw this out. So we can see in this case, you know, we would loosely consider this a bat harmonic, right? Going back to our cheat sheet here, you can see the bat harmonic retraces between the 382 and the 0.5. The Gartley is really, you know, very specifically you want that 618 zone, right? whereas the BAT gives you a little bit more leeway between the 382 and the 0.5. And you could also look to say before it even plays out, you know, you're going to have to, and that's why it's so important to have a lot of confluence for these, because, you know, after the B wave, you know, between the 382 and the points in the 618, well, God, it could go down to the the 1618 extension if it were a crab, right? Because this is the same as a Gartley, or maybe it stops at the 786 if it's just the 618, right? Or even here, if it's at the 382 or the 0.5, well, that could also be a crab. So you have to have a lot of confluence at your D wave. So it's just really important to, you know, every step of the way at every level to see, you know, which harmonic could it qualify as, and then using other technical analysis to be able to draw out where you believe the D wave will wind up. You know, if you don't want to trade the C wave and just trade the D, all you have to do is wait for that one to be put in and then go ahead and take the trade, right? So we'll go ahead and get back to our chart. As we can see, we had this one on a 30-minute time frame. We can go ahead and look at you know, how close it was on the timing with our fib extension, with our fib time tool. And you can see just about a half hour off. I mean, it was so close, right? Really, it's such a nice bat harmonic here. And, you know, from here, again, we would take our fib extension tool, go ahead and draw from X to A down to D, and we can see that we have two nice take profit levels here. One that we hit here, and then later on hitting the 1-to-1 extension. The 1-to-1 extension was also a great place to take profit. As you can see, if we draw from our swing high to our swing low, it was also the 618 zone. So having that degree of confluence, you would say to yourself, yeah, I definitely want to be taking profit at the 1-to-1 extension when we do go ahead and hit that. So you can see this was also a really, really, really nice harmonic to go ahead and trade. We'll do one last example on ETH here. And again, these are just two examples that we have traded within the last week here. So I do, you know, I just wanted to take some time to point these out. And the reason why we've been trading so many harmonics is because we are in some choppy price range, right? That's when these shine. And I absolutely love being in ranges, because I love channel trading, I love range trading, and I love trading harmonics. So yeah, we can go ahead and look here. You know, you can see the D wave, the 886. We kind of front ran the 886 a little bit, but we had that, you know, this nice we had this nice trend line here just right around that zone. So, you know, I kind of went and drew this out, and we can see that this would qualify more as, again, probably a bat. Maybe you could argue, no, I would say that this is more of a bat harmonic. And again, you know, just going ahead and getting rid of some of this stuff here. A great first take profit. Look at that. Boom. The 618 retracement between the C and the D, right? Great, great, great take profit. We can see prices finding some degree of support there. And then if we go ahead and draw our Fibonacci extension, we go, you know, X to A up to D. And we can see, you know, the 618 extension here, and then also the 1-to-1 extension down here. And the 1-to-1 extension lines up really well with a key zone of support down here. You know, if we go ahead and kind of zoom out a little bit here, you can see that, you know, this area was a really, really key area of support. So if we were to get that move down, it wouldn't be surprising if we spent a little bit of time there. And then also the 618 extension could line up with maybe a swing failure of this low here. Swing failure of C here, right? So again, another great spot to take profit. You know, again, entering around D, placing your stop loss above X, giving you that really nice, you know, setup for then a move down. And one thing I do want to point out, if we go ahead and draw the fib time tool here, you can see that the fib time didn't actually play out exactly like how I would wanted it to see. So for me, this is like a very lucid moment on the chart, right? So if I go ahead and pull this over, oh, I want to pull this one over. We would expect price to get to the 886 at around this time. So the fact, you know, we did it a little bit early. And in fact, I just want to double check to see if maybe if it was right in between the 618 and the 1-to-1 extension in terms of time. So this would be something like where we get to this zone, and I know that I'm generally bearish. I'm looking for some degree of continuation to the downside, and we've had this massive move up. And it is over kind of a longer period of time. We can see that this is a multiple day from the 30th to, you know, the 4th. So about a 5-day harmonic here. So we can give it a little bit of leeway. You know, really how much is that? It's still within a single day's time period. You know, if we were to even go on to like, you know, a 6-hour time frame, perhaps, you know, you're really only, you know, a few candles away, right? So going back down to our lower time frame, this is how I would look to trade this. And I did enter on this position here, especially that we got this little swing failure pattern here. I really liked that. So that was another form of confluence for me. So I went ahead and took the short position here. I didn't enter a full position. I entered about half of a position here. And I looked to trade it down, and I'm thinking to myself, my thought process is, I'll go ahead and take my position here and look to trade this down. If price does come back up again and maybe sweep this high, I'll go ahead and enter a full position if it happens, you know, sometime around this 1-to-1 extension, right? So I give myself a little bit of leeway to say, gosh, I could maybe see another move up because the harmonic was a little early. But, you know, at this point, especially looking at how it is here on the chart, I mean, this is already playing out so nicely, already hitting our target 1. You know, at that point, I would probably expect for it just to probably continue playing out instead of getting that move up to make it more of a perfect play out on that harmonic, right? And again, you know, you could have went and entered full position here, knowing that it could go a little bit higher. But here's the deal. You could have went and entered full position here on that swing failure pattern, right? You're saying, okay, I think that this is the D wave on the harmonic. And having your stop loss above here, even if price did come down like this and then come back up to actually hit the 886, it's not like you're going to get stopped out, right? You still have that 886 as resistance here, and you're still expecting to trade it back down, you know, significantly lower, right? So at the end of the day, this regardless would have been a really nice entry. But the point I want to get at here is that the harmonics are not always going to play out perfectly, so you do have to give them just a little bit of leeway at times in terms of price and especially in terms of time. But again, you know, just having that idea, because this was a couple-day harmonic, so, you know, on the 3rd, we can say, well, you know, if maybe sometime on the 4th, you know, the following day, if we put in, you know, somewhere around the 886, I'll start looking for a short. And that swing failure pattern was really a nice trigger for that, signaling that, yeah, this is more than likely our D wave. Okay. And again, you know, the best way that you can do this is to go ahead and draw out at least your XAB, and then go ahead and look at potential areas for C and D. You know, let's just very briefly, I do want to go back and just maybe show you guys this very, very, very quickly, you know, maybe even on this one here. If we just go ahead and maybe do a replay back to here, you know, you can say, well, I have this potential, you know, I have this potential bat harmonic, right? And this could retrace anywhere between the 382 here all the way up to the 886. So I always like to kind of draw myself a little bit of a zone, right? So I'll kind of go, well, between the 886 down to, you know, I'll draw myself a zone. So this would be roughly the 886 there down to, you know, the 382 to here. So I'll say, okay, I'm expecting price to reject from somewhere in this zone here, and then to trade down to, you know, you're looking for the 886, but you can say, you know, roughly the 886, you know, I can give it a little bit of leeway here. You know, 886, maybe, you know, a little bit close to the 786, but somewhere, generally speaking, somewhere in here. And this is how you can look into trading this, right? So when you see price get this move up to here, then you can start to look for a short position and say, okay, I am going to trade the D wave. I'm going to trade from C to D. What I'm going to do is I'm going to take a short somewhere in here. I'm going to put my stop above A, and I'm going to target somewhere down in this box here, right? So if you go ahead and, you know, we can just go ahead and hit play here. You know, you can see you have that, you know, roughly, right? So price roughly is in this zone, We can see that it is finding resistance here at roughly the 786. So I'm going to go ahead and open up a short position there, put my stop below, above the previous high here, A, and, you know, go ahead and look to trade it down to this box here. You know, and that's kind of this is really how I like to do that. And you don't always have to trade C, by the way, but D is definitely the one that you're going to want to look to trade, right? And you can see, okay, cool. Well, we've entered that box. We are finding that BTC is finding support here. So we can see that, you know, it's just right at the top of that box there, basically. I didn't mean to move it up there. Just right at the top of the box, just below the 786 roughly, right? So this hit about target, and then you would go ahead and flip, you'd go ahead and flip long, probably here, and your stop below here, and then you would go ahead and take your fib extension from X to A down to D, and you would go ahead and trade it to, basically these two targets here, ultimately up to here, taking profit at this zone here, right? And as we know that this ultimately played out really, really, really well, right? We hit that first take profit zone. Price did not go down below D. And again, like at this point, you could even risk to do another long, re-enter another long here with your stop below D and say, well, we didn't hit the 1-to-1 extension. I may open up a long here with my stop below D and look to trade it back up to the 1-to-1 extension. I have a very clear invalidation, price going below D, right? And it would be a really good risk reward trade, right? If you go ahead and move your stop up to here, then, I mean, you can see that the risk reward on that trade is, pretty damn good. Even if you caught it on a closure up here, which gave you a bunch of time, it's still over 3 of a risk reward ratio, right? So we can see just how well that ended up playing out. So again, yeah, we'll go ahead and cut it off there, but I know that this is a pretty complex tool, so if you guys do have questions, feel free to ask me, and I'll do my best to answer them and maybe do a follow-up video if there are, more questions that kind of went unanswered in this one. So as always, thank you guys for watching.